Well, hello, folks. I'm L.A. Little, and this is your daily NeoTA wrap. We take a look at these markets and we do it from a neoclassical perspective, each time asking ourselves what happened today and what does it tell us about the coming ones. I do this show 4 times a week, Monday through Thursday, broadcast at or before 10 o'clock Eastern Time. Is archived on YouTube. It's available there, any place, anytime, anywhere, any device. All you have to do is sign up or visit YouTube. Look under the channel L.A. Little. You can ask me questions. You just pop in here to the where do we go here? NeoTA TV. Pop into there. There is a set of instructions here. How to get to me, questions you can ask, so forth. So, if you want to ask questions, feel free to jump in. I appreciate it. I think it makes for a better show when there is some feedback and some questions out there. As far as the markets, let's look at the ending numbers first. We actually had some downside today. Haven't seen that in a very long time. I think we've had 3 down days on the way up. 6 weeks of up, of which 3 were down days. Here we go with some pretty good losses across the board. The Russell was leading the way down again. The S&P, remember last night we were looking at it saying, hey, it got a weekly 2-bar reversal. That should trade sideways to down this week. That's what it looks like it's going to try to do. Started out that way this week, down 14. If we look across all of these, the Dow actually held up pretty well. A lot of that was a big bounce in the oil stocks, in particular CVX, Exxon Mobil. Those are 2 big weightings in the Dow that tended to prop it up, and you can see elsewhere pretty much down. Huge reversals in gold and copper and silver and oil itself. Just large reversals. Gold had like an $80 reversal today. It was huge. I haven't seen that in a very long time, and that's what happens when you start getting down to lows, to places where people expect a break and it doesn't break, and then there's some short covering, and all of a sudden you got a heck of a reversal going on. So, in summary, a pretty volatile day, and in general, a negative day, which is something we haven't seen in quite a while. Let's look at the charts. Volume expands on the S&P as it comes down. The bar it's coming into here, 39.1, it did 41.5, so it has the volume. It's up underneath it now. That looks to try to carry lower. Now, if you look back, and again, we haven't seen anything like this for a while, but if in fact we're going to get a retrace, there is a bullish ABCD structure in place right now, and there's a retest regenerate zone right here. It's already tested it once on that bar. This was the breakout. The very next bar you got to test, and then it kind of held here in a little tight range and then expanded up. Now it's coming back. It can certainly test into this again. That's where the volume sits. That's the only place there is volume until you get way down here. And there's nothing to stop it from coming back that far if it wants to. The only thing really to stop it is the fact that this market is extremely bullish. At some point, you expect markets to roll over. Maybe this is the rollover. It certainly has the markings of having a potential rollover. So we'll just have to, monitor it and see if it wants to do it. Again, we had the 2-bar reversal on the weekly that suggested potentially some weakness come today, and that's what we got. On the Dow comes in. It's a little bit different story here because the Dow comes in. The big bar here was the 24th. There you got the volume. It didn't quite test that low, doesn't have the volume. It looks like it's going to try to test it tomorrow, but unless it can get underneath it, this one certainly is in better shape. If we go over to the NASDAQ and NDX, now remember last week they were the ones that were just climbing and would not stop. The broad composite did not fail on Friday, and today we gapped down. So you didn't get clean reversal signals here. Again, last night all we saw was a couple mixed ones. It was like three mixed signals suggesting, the bonds were trying to move higher. These things were moving, not these things, but the S&P had that 2-bar, and you had a couple 2 bars on sectors on the weekly, but you really didn't have much on the daily charts. And as is typical, this market's not going to give you anything easy on the upside or the downside, so they gap it down, come straight down, and really allow no one to get out or put any shorts on. I wouldn't be surprised to see them try to travel a little bit farther down. Where to? Well, this is the kind of the congestion area on the way up. We had a breakout here. That's where that retest regen was and got retested already. It's where support is now. If it wants to come back that far, you know, we'd get ourselves a 2, 3, maybe 4% retrace. And you know, in this kind of a move where you've had 12 up, I guess that's not that abnormal, but we'll just have to see if it really wants to do it, because right now, you know, you've got pressure coming off the top, and that could give us that reversal, right, that retrace that we've talked about, where you get at least 2 to 3 bars to the downside. At the same time, there was no clean setup to put it in place. And I told members last week one of the things I was doing was I was putting some shorts out, and just putting them out with the idea that I probably couldn't get hurt on the top side, and they would give me some cushion on the downside. And you know, when you get this extended, you can start to do that. You know, if it works, great. If it doesn't, you know, you're putting your shorts out against existing longs, it's going to eat up all your profits. If you do come back, you get a little bit of a cushion, right? Unless you hedge more than you have, you're probably going to lose even on a hedge, because the betas are very high usually in almost anything compared to the index. So you know, it's not as if you're going to make money. You're just trying to cushion after a big run, and that was the ideal there. But it's just a calculated gamble, because there's no indication that it's going to happen other than the fact that it's so extended. So anyway, down day, gap down. If you look at the NDX, same thing. And if we walk over to the Russell is the one that is going to be the interesting one again. So what did the Russell do? Remember last night we talked about, you know, you had a full retest regen and actually closed below it. You want to see another bar under it to kind of tell you that yes, it has really done that, and yes, it really has. Volume expands, it comes back. It's going to test this low now. This bar has a little bit of volume, so tomorrow we'll see this test right here, and that will be the key test. If it gets under it, breaks another swing point low again, just as it did back here off this swing point low. So we may see some sort of an action that brings it back this deep. That's the Russell. Russell once more leading us back down to the downside. And folks, it's been that way all year. The Russell has been the leader to the downside. It has been the one that simply cannot get things going. So that's the indexes. And so as you see there, you know, pressure being applied, no strong signals that you're going to get carried through, other than the fact that you got some volume expansions off that pullback. And that to me will be the sort of thing that you want to watch tomorrow and see if that continues or not. If we pop over to the sectors, and I'm going to spend a little bit more time just building up to the synopsis tonight, because there was a lot that happened today. When I look at the sectors, you know, IBB, this guy's coming back doing a retest regen off the high. It's an immediate one, probably test to the bottom of it, so that probably goes farther. Last night I talked about the transports and the strange bar that we got on Friday, where you had oil collapsing, yet this thing skyrockets and then gives it all up. You could tell something was wrong, and you definitely got the wrong today. Huge push back down. It gets underneath, or actually right to that swing point low. Is going to test it tomorrow. I would not be surprised to see this come all the way back to support before it's done. That's a big reversal. Actually, there is, when I look at it again, there is some support right here. So looking at this bar, looking at that one, and that's this bar here. Let me get rid of the the other one there that I kind of dirtied up. So this bar, date on that one is November 5th. That's where the volume is. Top of that is 159.19. We're not that far away from it, so it looks like it'll probably just test into there. So that's the IYT. So IBB a little bit more downside. IYT, SOX comes off a little bit. Not huge volume expansion, but some volume expansion. XLB couldn't hold the retest regen off of this high. Now it's coming back into the next one. That's going to continue to test. XLE actually, as I talked about at the top of the frame, got a reversal, had volume expansion. It was coming into heavy volume bars at the lows, so that's actually not a bad reversal. But given that it gave more volume on this trip down, I wouldn't be surprised to see it get back up, do a retest regen off these lows, and then come back and do some more testing. So maybe some more bounce there and some more testing. XLF, you can see more pressure being applied as it comes off gaps down. And that's kind of the story everywhere. XLK had some expansion in the volume on the way back. XLI, same thing, expansion of volume. XLY's expansion of volume. And so the reason of going through these and showing these is that even though all of them were basically gap downs and you never got a quote-unquote test failure of the highs, you had expansion off the top. Not huge expansion in most cases, but expansion. That says, hey, you could get some more pressure. So I don't know that we'll get that pressure tomorrow, but certainly we're set up to potentially get some more downside as a result of the way this looks. Overseas markets, I'm not going to go through them all. Europe is the only ones that held up. Asia pulled back. Chinese data not so good. Protest in Hong Kong again. Heating up, and so Asia struggling, and all the resource countries struggling. Australia, Brazil, Canada. Europe, the only one holding up. Why is that? Well, because Draghi's going to speak on Thursday, and nobody wants to get in front of that. So that's kind of the scenario there. Europe probably tries to hold through the Draghi speech, and then elsewhere we're probably going to see more pressure probably this evening in Asia and potentially here again tomorrow. Okay, so synopsis wise, and I'm going to pop in and do the ox market as kind of the feature tonight, so I won't go there yet. But if we just look at all of what I've talked about, there's a decent chance that we can get some more pressure downside. As I've said for a long time now, when we finally get these retraces, when these retraces really do start to happen, I don't expect the first trip down to carry all that far. What's really going to be important is how they behave on that first bounce. In other words, how does it look when you go down, and then what do they do as they bounce? And so if I pull the S&P 500 back up again, and I just proceed to say, okay, this thing comes back down this far, I want to see what that next bounce looks like. Is it going to come back up and make new highs, or is it going to fail somewhere like on this bar now that we've left some volume, either at the top or the bottom, depending on how far we come down? That will be the key to give us an indication into the end of the year, because normally this time of year you're going to get a Santa Claus rally. I mean, you had a strong October, November, middle October on. And when you get that kind of situation, most of the time you're going to see a Santa Claus rally. So that's usually the last 2 weeks of December into January. And, the way we're setting up here, you're trying to get a pullback now, seems like the odds-on bet, right? Now, the market so far hasn't been kind to anybody that makes on the odds-on bet, unless you're betting on a V-shaped recovery, which seems to be the only thing that works without fail. So we'll see how this plays out, but that's the sort of scenario that it's setting up for, and we'll see if it actually ends up doing that. That's the odds-on bet right now, in my opinion, and I suspect that's what most people are thinking, which is why I'm kind of hesitating to suggest it in fact will happen, because I never like to be on the side of all the other people. So let's go into the feature here and think about what was happening today. It really was a risk-off day. when you look at the indexes, and what moved in those indexes, it was risk off. For example, if I pull up Apple was risk off, right? Pulls back, comes back hard. It's a risk off situation. If I look at any of them, it doesn't matter. They were all bleeding risk off today. If you go to the emerging markets, it was definitely risk off. That's what you saw there. Pressure down. It's down here testing swing point lows and breaking. If I go to the FM, which is even a more emerging, it's the frontier markets. That one's already broken down. If I look at if I go over to the other side of the equation and say, okay, what do the bonds look like? Junk bonds. Big volume expansion, comes down, doing another ABCD structure to get it to the lows again. So junk bonds are not looking too healthy. Now, they typically go along with the markets, and right now, markets down today, they're down today. There's a little bit of a lead here, but not much. We covered, or actually, a member asked this the other day about whether it was a leading indicator of risk off coming. If it's a leading indicator, it only gives us a day or two, and it did, I guess, if we look back here, kind of give us that lead on Friday. Even though the markets held, this one came down pretty good, down 1% that day, but definitely down today another 1.25%, testing the lows. If you look at even the high quality bonds like the LQD, that one came off today, volume expansion. So anywhere you look, it basically was a risk-off situation today, pretty much across the board. If we look at elsewhere, and one of the members wrote me today and said he had his best day trading in a very long time in gold. Gold was a crazy case today. It did almost an $80 swing, I think, 80, 85 bucks. Here you can see by the time we opened, it had already gapped higher when it was down about 25 last night on the Swiss vote. Look at the volume come into this. That to me looks like short covering, just like we saw back here. But that short covering like that can carry for a while. At this point, it has broken this swing point low. So if we look back and think about it from a retest regenerate zone standpoint, it's clearly over it now. That says, hey, at worst for now, on this time frame, this is a range trade, right? It's a range trade going forward, and we're going to have to see how far it wants to carry. If we look at the weekly, the weekly's now going to come up and try to test back, full retest regen off of this swing point low. Top there, 119.62. So if I bring this back in, 119.62, gets us right back up to that swing point high almost. So you can see still, $3 worth of room on this trade if it wants to go that far. So it's still a large, another $30 to the upside if it wants to move. Silver, this one has been shorted even more dynamically, and this one got a huge jump as well. It was up about 6.5% today. Gets over this, has the volume, gets over this prior big volume wide price spread bar, and gets all the way back up there. These are reversal bars. They're takeaway bars. They're high volume wide price spread bars in most cases, and all of that, when you get that kind of dynamic, you have to expect they're going to carry farther. So if you're in some of these, you don't want to take your profits immediately. You want to hang back, let it let it carry a little while. I've talked about, to my members, I've talked about the favorite stock that I have in this sector, and I'm back in it again. But you just have to. Gold is one of those extreme things. It's extreme up and down. It carries large percentages when it goes, and you just have to buy the dips, and then expect that they're going to turn it at some point for some reason. And if we flip over now, oil has become the same trade. In other words, huge extreme moves Clearly the trend is bearish here, so anybody playing this one, just like on gold, anyone playing this one to the downside has been rewarded. But when you have this much pressure this fast, you have to expect that they're going to bounce, folks. They don't go straight down. I remember when we were talking about the S&P going up at this angle. That's not sustainable. If you look at it now, the angle's like out here, which is much more sustainable. This angle is sustainable. This is not. So what's it going to do? Well, it's going to come back up. It's going to probably test into this area again, and then you get some more continuation pressure down. You left volume at the bottom. It'll be back. It's not over, but in the meantime, it can give you one heck of a bounce. I used to listen to a colleague of mine when I wrote with Real Money, and Helene Meisler, and she used to say sometimes, some of these stocks that were essentially going to go bankrupt, she'd say they double 5 times on the way to zero. That what she was saying is, hey, you're going to get these huge bounces, right, that come into these things. It's down, it's sideways, it's down, it's sideways, and it's huge down. Well, you're going to get a huge bounce, right? It's going to double again on the way to zero. And, not literally double, but big moves back up as it continues down. And that's because they get stretched too far. So when you're looking at these dramatic turnarounds, don't pop back in there and short them immediately. And if you're long them, if you were playing that retrace and, you took out a little position and now you got rewarded, it's a counter trend trade. You don't want to stay in it too long, but you're probably, given today's move, you're probably going to get a little bit more out of this. It's not going to turn right back on you immediately. So you try to stay with it long enough to get some of that move back up, and then flip around, go with the trend. Counter trend trades are made to trade, not to hold. These trends, the trends are the ones, they say trend is your friend. The trends are the ones you want to try to hold. If you go against it, especially if you time it just right, you've got to get your, little 2 bars, 3 bars max and get back out. And, be glad that you timed it correctly. If you don't, you're just going to give it all back. So don't do that. All right. So as far as today, I think that's a good feel for what's out there. Looking at the calendar, Beige Book on Wednesday, ECB on a Thursday. You've got the Australian Central Bank doing its thing tonight. I think India's tomorrow night, as well as Canada Wednesday morning, if I remember right. Then the ECB Thursday. So you got 5 central banks, Britain also Thursday, 5 central banks this week. Of course, the big one being Thursday. Europe's probably going to hold pretty tight until that happens. If they do not come out and explicitly say they're going to do sovereign debt, you're probably going to see a sell-off in Europe if the rest of the market, continues to trade like it's trading, which is pretty choppy. If they do come out and say that, that could be the goose, back the other way, because they certainly could push it higher off that kind of news. Is that going to happen? Are they going to say that? I kind of doubt it. So I think the risk is for some more selling off that news. Friday's the employment number, Beige Book Wednesday. Those are the big events this week, so they're back-end loaded, Wednesday, Thursday, Friday. Tomorrow's kind of a drift day, which makes me think we could get a little bit more pressure early and then some sort of a pop after that. All right, thanks for joining me. Tell a friend, tell 2. I'm LA. This is and it was your daily NeoTA wrap. Have yourself a great night, and I'll see you next time. Good night, folks.